to take this time to introduce our wonderful speakers today, Megan and Brittany.
Hi, gang. My name's Megan Crane. I've been with Dean Dorton for 11 years, and I'm a manager of assurance services out of our Lexington office. I spent a lot of my year working on single audits. I do some higher ed and healthcare, so I see both sides of the house on this, and I'm excited to share a lot of knowledge and information we have with you guys today. Brittany?
I am Brittany Redholtz. I am a manager of assurance services in the Lexington office, and I have been with Dean Dorton. It'll be 6 years in November. Okay, so let's get started. Our objectives today are to gain an understanding of the impacts of the receipt of those provider relief funds. We're going to go over an overview of single audit concepts. And we are also going to review the timeline of the compliance supplement and what to expect along those lines. So on March 27th, 2020, the President signed the CARES Act bill in response to the economic turmoil as a result of COVID-19. As part of the CARES Act bill, it ended up being a $2.2 trillion economic stimulus package, which included the individual one-time cash stimulus payments that we've seen. It also included the Paycheck Protection Loan funds and the provider relief funds, which is why we're here today. And the provider relief funds represented about $100 billion of that CARES Act trillion-dollar funds. Once that was issued, there was a period of time after it was released as to wondering whether or not an audit would be needed on these funds. And we got an answer on July 22nd, an FAQ released by the Department of Health and Human Services noted that an audit would need to be completed on the funds if you received over $750,000 of these funds. Now, you have two options, kind of high level, and we'll talk about this a little further in detail in regards to the options that you have. So there's a single audit option or a program-specific audit requirement option. And we know that the CFDA number there is 93.498, and CFD is just a catalog of federal domestic assistance number, so all funds have a CFDA number assigned to them, and that's how the government oversees these funds, which we'll dig into a little bit later. So I mentioned that there's currently two options, a single audit or a program-specific audit requirement. So what is a single audit? A single audit is an organization-wide audit to review how your organization has managed federal grant funds appropriately and complied with specific requirements. All that from the receipt of the funds to expenditure. So how are you managing those funds appropriately and with the purpose that they were given to an entity for? So our second portion is a program-specific audit that I mentioned was another option. A program-specific audit is an audit of expended federal funds awarded under only one federal program. A key point here is that in order for a specific program-specific audit to happen or be an option, it's going to have to be all the funds received, federal funds received, they all need to fall under a single federal program. So in this case, HHS, or the Department of Health and Human Services. So if all the federal funds received during the year were all from HHS, then there's a possibility that you would qualify for a program-specific audit instead of a single audit, and we'll talk about those other options. So I mentioned that there's different options for a not-for-profit entity or a for-profit entity, so we're going to dive into those a little bit. So depending on what kind of entity you are, there's different options in order for your entity to be in compliance and getting these funds audited. For not-for-profits, you can be subject to a single audit requirement, which is under the subpart F of the uniform guidance. So one caveat to this is that if you fall under the single audit, all federal awards, even those outside of the provider relief funds, would be subject to potential testing, excluding Medicare and Medicaid. This auditing under the single audit would also include what we call a data collection form that Megan will follow up on later in the presentation. Not-for-profit entities also have an option for a program-specific audit, but we are waiting on further guidance as it relates to that, which I'll touch on shortly. For-profit entities are subject to audits as described in Section 75.216 of the Department of Health and Human Services adoption of the uniform guidance. And all that to say is that as part of this adoption, it gave a few options in order to get these funds audited. You can have what is called a yellow book audit, which would be a single audit without that data collection form that I mentioned previously. You can complete a program-specific audit, or similarly to not-for-profits, you can complete a single audit under some Part F of the uniform guidance that would include a data collection form. You'll see the key point at the bottom is that we are awaiting more specific guidance from HHS as it relates to these audits of the funds for for-profit entities. And I keep mentioning that program-specific, maybe we might be able to, and the reason for that is for these key items right here. So in order to be eligible for a program-specific audit, all of your funding could only come from one federal agency during the year. So all federal funds that you receive would have to all come from one federal agency, and a program-specific audit guide would need to be available for that specific federal agency. You'll see in the blue box that for the Department of Health and Human Services, there's currently no program-specific guide available. So as it sits today, we don't meet that second requirement in being able to just complete a program-specific audit on these funds because there's currently not a program-specific guide available from HHS. But one could be released as part of the 2020 compliance supplement, which we are still waiting on. And the program-specific audit also does not typically include a financial statement audit. Since the majority are probably looking at the single audit approach, we're going to go through kind of the history of the single audit and what to expect and what that means for you and your entity. So before 1984, every granting agency required their own audit. So for example, HHS would have their own audit of their funds that would need to be completed, and maybe if you received funds from the Department of Education, they would have their own specific audit that would need to be completed. In 1984, the Single Audit Act was created to consolidate these various agency audits into one single compliance audit. So it was enacted to streamline and improve the effectiveness of these audits of federal awards, and it would also reduce the audit burden of completing all of those individual audits for each granting agency. So all that to say, all funds, regardless of the awarding agency, they get lumped together, and steps are taken to decide which programs are subject to audit for the current year, which we will also talk about shortly. Single audits were formerly known as A133 with the compliance under O&B Circular A133. So those have been called A133 audits, single audits, and they're also known as uniform grant guidance audits. The purpose of a single audit is provides assurance to the U.S. federal government as to the management and use of funds. So all that to say that the entity is expending the funds appropriately. Okay, when is a single audit due? It is due the earlier of 30 days after the single audit report date or 9 months after your year end. So if you are a June 30 year end, your single audit would be due March 30th, 2021. If you're a December 31st, 2020 year end, your single audit would be due September 30th, 2021. As of now, there are no extensions on these deadlines as a result of COVID, so those deadlines are currently what they are. Don't delay. If these funds are material to the financial statements, then work should go ahead and get started, even though we may be waiting on a compliance supplement or it's not due till next September. So, for example, if you're a 12/31/20 year-end client, if those provider relief funds that you received are material to the financial statements, although the single audit isn't due until September 30th, those funds still need to be tested in some way to assure that they are materially correct as presented on the face of the financial statements. So just something to keep in mind. Who oversees single audits? The Office of Management Budget, or OMB, they administer the U.S. federal budget and oversee the performance of federal agencies. And since those federal agencies are those who are awarding entities these funds, they issue what's called a compliance supplement each year with requirements to follow as a means of auditing these funds and overseeing them. The compliance supplement, kind of high level, it identifies important compliance requirements that the federal government considers to be important. So each CFDA number, we noted the Provider Relief Fund CFDA number earlier, they have their own required compliance items to be audited. And these compliance requirements each have a corresponding audit program. And we're going to go through those various compliance requirements kind of high level and what they all can be. And then later, Megan will discuss which compliance requirements we believe will need to be tested on the Provider Relief Fund. There are no general procedures for grants. So there are no blanket procedures that all grants can be followed. Each grant has its own compliance requirements. The 2020 compliance supplement is a little different this year in that it is being released in two parts. So part one, which is what we typically see on an annual basis, was to be released at the end of June. It still has not been released, and that just includes the standard procedures on all of the grants that the federal agencies have with some updates from the prior year supplement. So that's something that's released every year. This year we're going to have part two. Part two is supposed to be issued in September 2020. And this piece is what will cover the CARES Act funding and requirements. So when the CARES Act was signed into law, the compliance supplement was already in the stages of approval. So now they're working on completing a part two that will describe any testing and compliance requirements as it relates to CARES Act funding, including the Provider Relief Funds. So as part of the single audit, you will need to have what we call a schedule of expenditures of federal awards, also known as SEFA. One key word that I always like to point out here is expenditures. So these are funds that were expended during the fiscal year, not awarded. So you think of it as kind of like your trial balance of federal awards that were expended during the year. And it's kind of the basis of the single audits and what we use to do our planning. It identifies all federal assistance received and spent by entity, by agency, and it is classified by the CFDA numbers. We have an example on the next slide of what this would look like. Typically, so the first column is going to be the granting agency, HHS, for example, program or cluster. A cluster is just simply there are some CFDAs that are combined that are similar enough to be a cluster within the supplement, and those are tested as kind of one cluster instead of all individuals. The second column is the CFDA number. The third, if an entity has received funds as a pass-through, that pass-through entity number would be in that column. The second to last column is if an entity is giving funds to another entity, so they're kind of acting as the pass-through, those funds would go there, the amounts that were provided to subrecipients. And then there's also the last column is that total federal expenditures. So these are the amounts that were expended during the year under each one of those federal agencies. I mentioned when discussing the compliance supplement that it includes these compliance requirements for each different grant. So I'm just going to run through these kind of at a high level, and then later Megan will discuss which ones we expect to see to be required for the Provider Relief Funds. So item A, activities allowed or unallowed, that's testing to make sure that the activities that benefit the purpose of the funds that they were awarded for. And B is very similar, and they're typically tested together. So B, allowable costs or cost principles, verifying that the actual, the expenditure of the funds, so that it's being expended on something that is allowed under the grant agreement. C, cash management, that is also known as the handling of funds. So from the receipt of the funds to disbursement of the funds, how are the funds being managed internally within the entity? E, eligibility, so only eligible individuals or organizations are participating in the use of the funds. F would be equipment, real property, and management. So this is management of any real property or equipment that the funds were used to purchase. There's certain procedures that you have to follow when dealing with that. G, matching level of effort or earmarking. So some funds and some agencies require that the recipient to provide maybe a level to contribute themselves. So that would be the matching piece. They may need to maintain a certain level of performance, or they may need to set aside a piece of the funds for a specific purpose, and that's where that would be tested. H, period of performance. So funds are typically awarded for a specific time period and can only be used during that specified time period. So that's where that would be tested. I, procurement, suspension, and debarment. When goods or services are obtained from a third party with the funds, the federal funds, this is just making sure that they were obtained appropriately. So there weren't any conflicts of interest. The purchase of them were done from an allowable vendor that is considered allowable by the government. J is program income. So this relates to testing of income directly generated by the federally funded program. So for example, if the funds were used to acquire rental property, the use of that program income. L, reporting. A lot of individual grant agreements have various reporting requirements that they have. So submission of the reports as outlined by grant requirements, and this is just a means to monitor activities, to measure their progress. Some of them require it monthly, some annually. Again, it all depends on what has been outlined in the grant agreement. M, subrecipient monitoring. I mentioned on the prior slide as part of that FIFA that there's a column for funds that have been passed through to another entity. So if you receive federal awards and then you pass those through to a subrecipient, you are required to also monitor their activity. And this is that requirement piece that you would look at for that. And N, kind of a catch-all, special tests and provisions. So some programs just have unique requirements to each of them that don't necessarily fall under these other 11 compliance requirements. So any special or unique tests or provisions they would outline in the compliance supplement under N. So a high level of the single audit process and what to expect as you go through this. The first step is planning. So the auditor, you'll prepare your CFA, and the auditor will review the CFA. I mentioned that when you undergo a single audit, all federal funds can be subject to testing with the exception of Medicare and Medicaid. So this is when we get the CFA, and then we determine what we call major programs. So we'll determine which funds are subject to testing. We'll want to understand the controls from receipt of those funds to expenditure of those funds internally within your entity. We'll look at the compliance supplement and determine how we're going to test. We're going to develop our testing based on those major compliance requirements that we just talked about that are required for the specific grants that we have determined to be major programs. So once we capture all that in our planning piece, next is the testing. So the testing will be completed on those that we deem to be major programs. Typically, it would be requesting the listing of expenditures. We'll select a sample from that listing of expenditures, and we'll test based on those compliance pieces that I talked about. Not all 12 will be tested for each grant. There will be 6 are required to be tested, and again, Megan will talk about which 6 or so we think may come out in the compliance supplement as being required for the provider relief funds, but we test those transactions and other maybe reporting about the grant based on that. We'll also do any kind of review of findings. So if we come across any issues, then this is when those would be brought to light. Lastly is reporting. Megan, again, will go into more detail kind of the various pieces that goes into this, but we'll discuss any issues that may have arose. This includes internal control items. It includes compliance issues maybe with the funds, and it will also include financial statement findings as well. Now that there's kind of a high-level overview of what single audits are, Megan is going to discuss the provider relief funds specifically.
Thanks, Brittany. As you all can understand now from just a high-level overview is that there are a lot of different pieces of the single audit process, and so we're here to help you all along the way. And what I want to do now is dive into the provider relief funds themselves. As you all know, the objective of the provider relief fund was to give hospitals and healthcare providers some relief to the coronavirus. And so the funding was to support any healthcare-related expenses or lost revenue attributable to COVID-19 and to ensure that uninsured Americans could get treatment. This objective is important to keep in mind because as we craft our testing, everything we look at is going to fall under this umbrella to see how you were in compliance with these objectives. As you all know, funds are to be spent by July 31st of 2021. What's interesting about that date is if you are a June 30 or 12/31 year end, if you spend $758,000 this year, let's say you're a December 31st year end, so for 12/31/2020, you expend over $750,000. But then you have some carryover funds into 2021, and you spend those funds over $750,000 in 2021, you could be subject to a single audit for 2 years as opposed to just one. So keep that in mind. HHS has said for a while now that they have information forthcoming about what to do with unused funds. So if you get to July 31st, 2021, and you have leftover funds you haven't spent or accounted for with lost revenue, then HHS should have information at some point, hopefully in the near future, about what to do with those funds. Next, I want to talk about a little bit about the allowable uses. As you dive down under the objectives of these funds, HHS has said this is what the money can be spent for, basically to prevent, prepare, and respond to the coronavirus. So it could have been used to build or construct temporary structures, leasing of property, medical supplies, PPE, testing supplies, increasing workforce and trainings, emergency operations centers, retrofitting facilities, and then any surge capacity. Additionally, it can be used to cover lost revenue. We're going to talk a little bit more about all those items later, but again, keep this in focus is that we're going to come back to any agreements, attestations, and information from HHS based upon the CFDA number to determine if what you use the money for is appropriate. Brittany talked a little bit about the 12 compliance requirements, and as we've reviewed what we know about these funds, we've narrowed down what we think are 7, which they're only allowed to pick 6, of what we think the requirements could be tested are. What's important here is that, again, we don't have the compliance supplement yet. We're expecting it sometime in September, hopefully. My fingers are crossed that it's before the end of the year. But what we can do is based, again, upon those attestations and agreements you have, we can start to craft our testing. And that's what we've done here. We said, okay, let's look at the agreements, what we've seen, what we know about these funds, and let's start to think about what compliance requirements our clients would be subject to. So, of course, the first 3, activities allowed, allowable costs, and cash management. So, again, how did you spend the money? Did you spend the funds based on lost revenue or the construction of structures or the PPE? So that would cover A and B. We're going to actually pick your expenditures and go back and look at these items. For cash management, same thing. There are specific cash management rules out there that are detailed in the compliance supplement. These are general rules that you can follow. We're going to dive into those a little bit later, but clearly you received cash. We're going to test that you were in compliance with those rules and that you handled the funds appropriately. And then the last item that we're pretty sure will be in there is reporting. The HHS has said you have certain reporting requirements. They also haven't released how for you all to report those. So we know for sure we'll look at your attestation that said, yes, I want to keep these funds. If you remember, the funds popped into your account and you had 90 days to accept and say, yes, we'll use these and we'll use these appropriately. So we'll be looking at those pieces. Potential compliance requirements. So this is where it gets into a little bit more about how did you and your entity spend the funds. So if you spent the funds only on lost revenue, then item F here of equipment, real property management is probably not going to fall into play. But if you spent the funds on building a temporary structure or purchasing property to build a structure on or any of those items, you might fall under these equipment and real property management rules. Again, we'll dive into your expenses, what have you said, and make sure they are in compliance with what guidance has been released. Same thing with letter I, procurement, suspension, and debarment. If you're going to spend federal funds, there are rules that exist that you have to verify that vendors have not basically been outlawed from receiving federal funds. So if you've made purchases, again, we're looking at, did you purchase PPE? Okay, that's great. Let's look at who you purchased these from, any issues with those vendors. So we walk through those steps. And then the last one, which would actually put us at 7 requirements, again, they're only allowed to have 6, but it's special tests and provisions. This is potpourri in our mind. We don't really know what they're going to say falls into this bucket. This could be anything. If you're a federally qualified health center, you might remember several years ago, we tested the normal sliding fee funds, and then all of a sudden in special tests and provisions, the 330B pharmacy program popped in out of nowhere. They decided that that was something they cared about, and so it popped into the audit program for 2 years, and then it left. So this is the area where we're not sure what HHS could say, but they could have special requirements here that we need to look at. Okay, now I'm going to dive into actually some of our testing. I know we covered this a little bit already, but we're going to dive a little bit deeper. So I want to just talk about, in general, let's talk about your testing. One of the most important things, part of a single audit, is the understanding and testing of internal controls. And so what's even more important here is that you have written internal controls in place. So you probably have some of these already with your regular financial statement audit if you're subject to that. But think about, if we're testing how you spent the money, so you purchased PPE, we want some controls in place that say AP clerk prepares the check, somebody else signs it, somebody else reviews it. So we're going to want some process memos that you all have to look at and say, okay, here are the controls they have in place, and then we actually test those in conjunction with our actual expenditure testing. So we're not doing multiple samples. We're pulling your expenditures. We're saying they purchased PPE. Is that allowable? Yes. Was it spent before July 31st of 2021? Yes. Were there controls in place? What are the controls? It was a purchase greater than $5,000. Per their controls, that requires 2 signatures. We see 2 signatures on the approval, and so on and so forth. I think what else is important here is that sample sizes, there's not a lot of auditor judgment here. They're prescribed by the compliance supplement and by AICPA guidelines and Yellow Book requirements that say, here are your sample size based upon risk. So we have certain sample sizes for populations greater than 250, and then sample sizes for controls that occur less than that. So we're kind of stuck. Typically, we have to test 25, 40, or 60 expenditures. So keep that in mind. Okay, next I want to talk a little bit about allowable activities and costs. Again, so this is where we're going to get your expenditure listings and look and say, what did you use the funds for? We're actually going to have that what did you use the funds for conversation well early in our planning process. Why is that so important? Because if you just used your money for lost revenue, that's one calculation. We need to talk about what did you use, what were your inputs, what are you thinking? Let's talk about your estimate. If you used it to purchase PPE, that's a different test. We're pulling all your actual invoice listing, picking samples from there. Again, this is kind of a back and forth process. More than a financial statement audit in my mind, because we really want to work with you to understand. Everybody spent their funds a little different. So we want to work with you to understand, yes, this is what we spent our funds for. Okay, this is how we're going to make our selections. You're going to give us the support. We're going to test that expenditure, walk it through those internal controls, and hopefully have no issues. And again, for cash management, this is where we're understanding how the funds were received and held. This slide details a few of the cash management rules that are prescribed in the Yellow Book. I think it's important to know here that you don't have to hold these funds in a separate account, but you should be able to account for every dollar that is spent received. So I know I had a conversation with a client last week, and the question was, again, the money surprised into the account, haven't gotten it moved into a separate account yet, so what could they do? Well, they also got a PPP loan, so you could keep your provider relief funds, PPP account, all those funds together in a normal federal dollars account, but making sure that you can account for it. Every dollar has to be accounted for in and out of those accounts. The federal government would like you to have these in an insured account whenever possible. So be thinking about that as well. I think it's interesting too here, the federal government, of course, would prefer you to have them in an interest-bearing account. But if your interest-bearing account would earn less than $500 a year, then it doesn't have to be in an interest-bearing account. But if you do have it in an interest-bearing account and it earns greater than $500, you're allowed to keep $500 to cover administrative expenses, but anything above $500 has to be remitted back to the federal government. And so a lot of you got your funds, or everybody got their funds on an advanced basis. Again, it pops up into your account, and so you are spending your funds over time. You didn't have your expenditures first and request reimbursement. So it's important here to be thinking about and tracking, are we earning interest? How much is going back to the federal government? That'll be something we look at during the audit. Again, from a reporting perspective, what we want to look at is we're going to get your signed attestation where you've told the federal government, I'll use these funds responsibly, I'll use them in the way that you have asked, which was required to be signed, I think 90 days after you receive the funds, so we'll get a copy of that. Again, that attestation also prescribes what the funds can be used for. So we'll, again, look to see that you're following all those rules. Again, CFDA, the CFDA number, beta.sam.gov is a website that lists all the CFDA numbers. So if you want to look up provider relief funds, you can. If you want to look up any other program, you can. And it details out what the requirements are. What are they thinking? Who's eligible for this grant and these funds, and what could they be spent on, and how much has been spent? And so on that website, it says 10 days after each quarter reporting is required, you have to submit a report. And so in a normal circumstance, we would say, okay, 1231 client, you should have had reporting in March, maybe June, September, and December. Show us those reports. Let's look to see if they were submitted 10 days after each quarter. Okay, they were signed, they agreed to what cash you said you spent, so on and so forth. We tie them all out. That's what it would look like normally. HHS has said, yeah, we told you to report this. We're still working on what reporting should look like. So here we are in August, and we don't really know what the reporting should look like. So again, that's why we're waiting for the compliance supplement for them to say, okay, yes, this is what reporting we wanted you to do. Did you do it? Here's the other areas we talked about a little bit already: equipment, real property management. Again, if you spent the money on something that would fall under equipment or real property, we would be looking around those, looking to make sure you followed those rules. Procurement, suspension, debarment, same thing. And then special test and provision. Again, we don't really know what could fall in this area, but we'll look at it once the compliance supplement comes out. I think the most important thing to remember as you're going through this process and spending funds is that documentation is the most important thing you can do. Document your decision. Document why you think adding this line to your lost revenue calculation is appropriate. Document your thought process. Document who was in the discussion, who had thoughts around this. Because really, at the end of the day, the more documentation you have, the easier it is to support the stance you took. It's hard. Everything's moving so quickly and changing so fast right now that it's hard to remember what decision did we make when we got these funds back in March. So if you're already sitting here at August 13th and you haven't been documenting along the way about where the money is going, what you're using it for, so on and so forth, I would really encourage you to start that documentation file as soon as you can. We'll be looking or asking for any documentation you have around these funds and what you use them for. And so, of course, the more you have, the easier it makes our job. Okay, so let's talk about the compliance supplement. Again, we've talked about how this compliance supplement is coming out in two parts this year. Again, we've developed procedures that we think are applicable based upon what we have seen around the grant. So the attestation, what we know from beta.sam.gov, that's what we've worked on. So what we want to encourage our clients to do is let's do your testing before year end. So if you're 1231, let's go ahead and get your testing done. Let's start looking at it in October, November. And then if we do find something major, I don't think we will, but let's say we do, you have another month to get it corrected before your year ends. And what's important about that is that we're required to report findings to the federal government. There's not much leeway, there's not much auditor judgment here. So if there is a compliance finding, we have every conversation with you we can to try to make it reduced or go away. But what's important, I think, is that if you can do your testing before year end, then it gives you an opportunity to still adapt and adjust and maybe either reduce the finding or maybe make it go away completely by the time the year has passed. So if you're at 12/31 and we do all your testing in January, that's fine. It may be fine. But again, if we find big issues, you may not be able to correct them before, based upon our audit report date. A single audit has a lot of reporting. So if you think about a normal financial statement audit, you have your independent auditor's report on there that says these are presented fairly in all material respects. Under a single audit, we have that same opinion, but we also have an opinion that the CFA, which Brittany talked about earlier, is presented fairly with the financial statement audit. So we look at that. There's also, then you have your financial statements themselves, all your notes. Then we have a report on internal controls over financial reporting. We'll talk a little bit more about that later, but basically what that means is on your financial statement audit, we talk about if there were any significant deficiencies or material weaknesses that came out of your financial statement audit. Then there's also a report on compliance for each major program. So in this case, provider relief funds. We have a report that says this client did great. They didn't have any compliance issues, hopefully, fingers crossed, and we feel that everything is stated fairly. Awesome. Everyone is required to have a schedule of findings and question costs, even if you don't have findings and question costs. And this is a summary. Basically, it summarizes those 3 reports I just talked about, discusses what the major programs were that we tested, and there's some other information on there, but basically it's a summary. And then if you do have findings, we detail the findings out, a required management response, corrective action plan is included. And then lastly is the data collection form. So if you fall under the audit under subpart F in the uniform guidance, you're required to have a data collection form. This is where we're really hoping HHS comes out and says, here's a program-specific audit guide, or here's what we want you to fall under Yellow Book. So for you private companies that are for-profit, you're not used to your information being out there. If you have to submit a data collection form, it's public knowledge. So you can go onto the data collection form website right now, and any entity that has had a single audit, you can pull their financials, their notes, you can look at their single audit findings, and there's a ton of information out there. This is where we're really hoping, if you're not for-profit, you're used to this, you will be filing a data collection form. It's basically an electronic submission of the audit, not a big deal. If you're a for-profit company, we're really hoping guidance comes out that says you don't have to do this part, because we just don't think you all want your information out there like that. I mentioned a little bit about findings. So if you have a significant deficiency or material weakness on your financial statement audit, which again, a single audit cannot stand by itself. It can be reported by itself, but a single audit is required to be in relationship to the financial statement audit. Therefore, if you have material weaknesses or significant deficiencies on your financial statement audit, those are reported as findings under the single audit. Additionally, we look at your controls from a single audit perspective, again, that compliance around your program, how did you spend the grant funds, if there's issues there, significant deficiencies, material weaknesses, and then just general non-compliance. Not something that would be escalated to be a major control area, but let's say you purchased PPE with your funds. Well, the one time it actually wasn't PPE, somebody purchased a TV, somehow it flowed through the grant. That would be a non-compliance area, and we'd have to report that. Hopefully that didn't happen, but it could. Again, lots of dollars flowing through. And any finding you have requires a management response and corrective action plan. Here are some other considerations to think about as you're going through this, this practice. PPP loans are not subject to single audit, so those are not included in this area. But additionally, you cannot double dip expenses with provider relief funds. So on PPP loans, if you had salaries you were covering, and then on provider relief funds, you've said, I'm covering these salaries because we've had to staff up, we've added a new location, testing center, whatever. Those funds, PPP loan funds and provider relief funds cannot cover the same expenses. Additionally, we do have a specialized Dean Dorton team that can help review your potential forgiveness of PPP loans. If you're an audit client, that'll be a required consultation for us. But if you're not an audit client or you're AFO or any other entity, we do have a team that can look at those that have been trained and studying every day. Additionally, EIDL loans, they are subject to the single audit. This is interesting. If you did, for some reason, get an EIDL loan, it could remove your eligibility from a program-specific audit because the Small Business Administration is the agency. Again, a program-specific audit requires you to have funds from the same agency. So HHS, SBA, it would kick you into a full single audit. Other CARES Act programming that you may have gotten funds from that are subject to single audit, the COVID-19 telehealth program, uninsured COVID testing and treatment, grants for new and expanded services under the Health Center program, emergency grants to address mental and substance use disorders during COVID-19, and then the rural health clinic testing. Again, if you got those items, those funds, we would expect those to be on your FIFA, your prepare, with the provider relief funds, and then we are required, there's certain steps we have to follow to say, okay, what needs to be tested? So you could have these programs and we not have to test them, but something to keep in mind. Okay, we have thrown a lot of information at you about both single audit and the specific provider relief fund requirements that we see. Here is Brittany's and my information. Again, we are both happy to sit down and talk, or not sit down, we could sit down, but video or phone call with anybody to talk through any of these requirements, give you a better understanding, or even just answer your general questions. There's our information. And if you have any questions after today, feel free to email us too. Again, we're happy to work through anything with you guys. We appreciate y'all's time in joining us today. Well, again, thanks everybody for joining us today. Happy to have you here. If you need more information, definitely let us know, and hope you have a good rest of your Thursday.